Hello, this is Craig Larson with Larson Financial Advisors for the Market Minute on November 5th, 2015. Well, we had in the stock market a pretty horrible August and September time zone and a really big rally in October. So the S&P 500 is very close to its all-time high set a few months ago. And so we're at decision point on S&P. If it can break out and get to new highs pretty soon, momentum indicators longer term seem poised to support a continued move up. If we stall here and start rolling over, you got to watch that momentum really carefully because that would be very bearish at that point. So in this recovery though, or this bounce back in October, the S&P 500 and the Dow have surged right back close to their previous highs, but other indexes like the Russell 2000, the small company index, the emerging and developed international markets have had very tepid rebounds. So now it's really a good excuse to go through the portfolio. Make sure that you're in, if you're going to take risk, you're in positions of strength. Now, we're also potentially seeing some sector rotations afoot, meaning that these sectors that were leading the charge up over the last 3 or 4 years, namely healthcare and biotech, have showed a lot of weakness now in the last month, and they've bounced very tepidly. So I'll continue to watch that and see if there's new sectors that show leadership besides internet and technology, which seem to be doing pretty strong here over the last month. Now, a little bit on seasonality. There's a great book that comes out every year called The Stock Trader's Almanac by Yale Hirsch. And in that book this year is an update on market seasonality, of which I've spoken of a number of times in the past. And you may remember that the stock market year can be divided into the strong half of the year, which is November 1st through April 30th of each year, and then the weak half of the year, which is May 1st through October 31st. As it happens, if you take the Dow Jones over the last 65 years, the winter half of the year is the strong half and the summer half is the weak half. And if you had invested $10,000 65 years ago and only invested during the 6 months in the summer, you would have lost money over that 65 years. And if you'd invested your $10,000 in only invested in the 6 strong months of each year, you would have turned $10,000 into $848,000, which is about a 7.5% compounded return. So now we're in November, we're back in the seasonally strong half of the year. We'll have to wait and see how that pans out, but that's a positive. Now finally, there's been some sweeping changes to Social Security just over the last week. A bill was started, I believe it was midnight on October 26th, fast-tracked through and signed by Obama on Monday, November 2nd. And what it does is it eliminates the file and suspend strategy for Social Security, which is a great strategy for many people to get more money out of the system. There's a 180-day period of time before that will be completely eliminated. So if you turn 66, or you know somebody that's turning 66 before the end of April, so 180 days from November 2nd, they should strongly consider this file and suspend strategy. If they're going to turn 66 after that time, it will not be available to them. So again, very limited opportunity here. We've got software in the office which can do Social Security analysis, and we're just going to get our updated version of that in a couple of weeks. So definitely call me if you or somebody you know may fit that situation to sneak in under the wire on file and suspend. So thank you for tuning in. I hope you have a great weekend.